Okay, taking a look at Chapter 2-3, Work Together in Aplia. I have my directions pulled up on the right here. We're just going to go through and record these transactions and T accounts. Remember, when you're recording in these T accounts, or when you're recording in accounting in general, debits are always recorded first. So we'll go through our steps, determine which two accounts are involved, how those accounts are affected, and then determine which one's debit and credit, and record the debit first. So in the first one, received cash from sales. Cash and sales are the two accounts that are affected. Received cash tells us that cash increases. Cash is an asset. Assets are increased on the debit side, so we determine that cash is the first thing that we record. So we're going to type cash, that top T account, on April 10th. Sales is the other account that's affected, so we'll type sales in the bottom T account. And by now we should know, or we should start understanding, that the sales is an owner's equity account. Owner's equity accounts increase, or I'm sorry, the capital account increases on the credit side. But even if we didn't know that right off the top of our heads, since we recorded cash as a debit, and we know that every transaction has both a debit and a credit, we know that sales needs to have $600 recorded on the credit side. Next transaction says sold services on account to Sam Erickson. So we need to determine the two accounts. Sold services tells us that a sale was made, so that's a sales account. And then on account to Sam Erickson tells us that Sam owes us money, so accounts receivable, Sam Erickson. Sales, we know, is an owner's equity account. A sale always has a credit recording, or is always recorded as a credit, because sale indicates an increase. So accounts receivable also increase because now Sam owes us more money. So now we know that accounts receivable Sam Erickson needs to be recorded as a debit. So we'll type accounts receivable Sam Erickson right there on the top account on April 11th. $850 on the debit side. Sales goes beneath that, and $850 on the credit side for sales. Next transaction, paid cash for rent, $250. The two accounts that are affected, cash and rent expense. First of all, I mentioned when we were talking about lesson 2-3 that expenses are always recorded as debits. So use that as your hint that we need to record a rent expense on the debit side of the T account. So that's the first account we record. Therefore, cash goes next, and we already have our debit, so we should know that cash is credited, but also we know that paid cash means a decrease in cash. Decrease in the cash asset is recorded on the credit side. April 18th, received cash on account from Sam Erickson. So this time we have cash and accounts receivable Sam Erickson, so he's paying on that bill that he owes us. Receiving cash means an increase in cash, so we know that cash is the debit because increase in assets occurs on the debit side. Oops. Accounts receivable Sam Erickson must be a credit because we already recorded the debit, but also accounts receivable, when Sam pays his bill, that means the amount in his account has decreased, so that asset decrease is recorded on the credit side. Last transaction, paid cash to owner for personal use. Remember, that's treated similarly to an expense. So cash is one account that is affected, and then Kathy Burgum drawing would be the other one, because when an owner withdraws money for personal use, they're drawing money from their business. So, like an expense, drawing is always recorded as a debit. So we know that Kathy Burgum Drawing gets the $300 debit. And therefore, cash is going to be credited. It was a decrease. Assets decrease on the credit side, so it's recorded as a credit. So we'll go down, check our answers, wait for that green circle to pop up. Did everything right. So good luck on your own 2-3 mastery problem. I'm sorry, all your application problems and your mastery problem, and I will see you on Tuesday.